Best ever listeners, welcome to the best ever CRE show. This is Beyond Multifamily. I'm Amanda Cruz, joined as always with Ash Patel. What's up, Ash?
Hey, Amanda, and best ever listeners. Today's episode is pretty simple, but interesting. It's just such a simple concept of buying land that anybody could do. The problem is it's not sexy.
I like that. Real estate isn't supposed to be sexy unless you're about to retire and you just want a trophy property. But how you really make money in real estate is day in and day out, asset management and finding assets. And it's not super sexy. So I do like that about it. He was also a good sport. We have Mark Podolsky on. He was a good sport with our pushback, all of our dumb questions that I asked and you asked. So I appreciate that. What do you think, Ash?
Yeah. But you know, what I did like is it's something anybody can do. It's that simple, little risk, little capital involved, and you could literally start making money if you have the time.
Super low barrier of entry. In fact, this similar model is how I got started in real estate. And if I can do it, that means anybody is smart enough to do it. So if you're looking to get in, this could be a really good entry point. And don't forget, we would love to interview you. If you have commercial real estate experience, every Wednesday, we're coming on with Beyond Multifamily. So as long as you're not focused on just apartments, we'd love to have you on, hear your story, and really get to know what your strategy is. So go to bestevercre.com. You can apply there.
Or if you started with apartments and you graduated beyond multifamily, we'd love to talk to you.
Awesome. Let's bring on Mark. Mark Podolsky, welcome to the best ever CRE show. How's it going today?
Amanda, Ash, pulse is normal. Respiration's fine. It's great to be here. Thank you.
Hey, happy to hear that. We don't want anybody who's passing out. That would make for a really boring show. So thank you for arriving and being alive. Before we jump too far in, can you give the best ever listeners a bit about your background and what it is that you focus on?
Yeah. And by the way, I've been a fan of Joe and Best Ever forever. So such a privilege to be back on. So thank you. So if we rewind the tape to 2000, I was a miserable, micromanaged, 45-minute commute to work and back investment banker. And I specialized in mergers and acquisitions with private equity groups. And guys, it got so bad for me, I wouldn't get the Sunday blues, anticipating Monday coming around, to get the Friday blues, anticipating the weekend going by really fast, and having to be able to work at Monday. I mean, it was, I remember sitting in this cubicle and like those fluorescent lights sort of like draining the life out of me. And the stakes are high for me because I'm miserable, but my wife is pregnant and we're having our first child. And I'm trying to figure out a way to live my best life and provide for my family. And so this guy at the firm tells me that as a side hustle, he's buying up raw land, pennies on the dollar, going to these tax deed auctions, and he's making a 300% return on his money. And so I'm from Missouri. I'm from the show me state. I don't believe him. So I've got $3,000 saved up for car repairs. I go to New Mexico with him. And I do exactly what he tells me to do. And I buy 10 half-acre parcels, an average price of $300 each. I flip them online, and they all sell for an average price of $1,200 each. It worked. So I took all that money, went to another auction, and this is in Arizona where I live. And again, this is 2000. There's no one in the room. I'm buying lots and acreage for nothing. I flip all that land, and I made over $90,000 cash. So I go to my pregnant wife. I said, honey, I'm going to quit my job and become a full-time land investor. And she said, absolutely not. So I said, okay. So it took 18 months for the land investing income to exceed the investment banking income. And then I quit. And I've been doing it full-time ever since. I've done I think I've lost track, but I think over 6,500 transactions, and still going and absolutely love it.
Mark, kudos to you. I don't think I've ever spoken to an investor who said, my first deal was in one asset class and 20 years later, I'm still doing the same thing. You've avoided shiny object syndrome and just stuck with what you know. How did you do that?
It's so hard, Amanda. It's so hard. And I have shiny object syndrome with everything, like AI. I want to try that tool and I want to try this tool. But at the end of the day, I think the only thing that kept me from not having shiny object syndrome was in 2005, and this is in Arizona, the market is just crazy hot. I flipped a house. And at the same time, I'm doing my land business. And I'm going to the house and I'm meeting subcontractors. And we made money on it. But when I factored in my time, I'm like, why would I do anything else but raw land? And every time I get distracted, nothing beats from a risk-reward ratio what I'm doing. I have no advantage anything else, right? I mean, it takes a long time to get good at anything. And I've been doing this for 25 years, so I have no advantage in multifamily, right? Joe's going to get the deal. And if Joe passes on the deal, there's a reason Joe passed on the deal, and I'm seeing the deal. So I've got to have time to do that. And again, like I'm buying this asset. I don't have to maintain, don't have to protect. It lasts forever. Pandemics, floods, fires, doesn't affect me. I'm paying cash, so interest rates can do whatever they want. I don't care. I don't have to buy down the interest rate. No problem. I don't have to worry about outside hard money lenders and their interest rates. No problem. And so I'm making my money on the buy. I'm buying this asset at 25, 30 cents to the dollar. And then I flip it and I create a land note. I become the bank. So I get this passive income. So it's a one-time sale, but I get this passive income or recurring income every single month, but no headaches, no renters, no rehabs, no renovations, no rodents. And so coming from this worldview of having this 90% automated with software and inexpensive virtual assistants, everything else in the world looks really complicated and really hard.
Mark, you said something interesting with the risk reward. Most investors see land as more risky because it doesn't cash flow. You're saying you're buying everything 100% cash, so you don't have the recession risk that really can come to light with land.
Right. And so, yeah, exactly. And so I do make it cash flow. So the typical land model is like a land banker, and it looks like a hockey stick, right? So I buy it in the path, the growth path, right? And then the developers come and there's growth and hockey sticks up. But while I'm holding that land, it's negative cash flow. No good. And I'm paying property taxes. No good. And there's no guarantee it's going to be in the path of growth. Something could happen. There's risk. It's outside of my control. So I shortcut all of that. I buy inexpensive raw land, rural land, an hour, 2 hours from the nearest city. And then I'm buying it 25, 30 cents on the dollar, and I'm flipping it. And let's say, I sell a piece of property to Ash. I paid $2,500 for. Well, I'll sell it to him for $10,000, but I get $2,500 down. Then I'm going to get a car payment, $299 a month, 9% interest for say 60 months. Ash is happy. He's got an asset he doesn't have to worry about. It lasts forever. It's a nice legacy asset for him. Maybe he'll take his spoiled kids out there, get them off of their phones because there's no, service out there. So everyone's just got to camp or do whatever they want and be present with their family. And so that's what I've been doing, that model for 25 years. And we have thousands of notes.
You said initially when you were in those auction rooms, there was nobody else. How has your strategy evolved over the years? Because the secret's out on all real estate.
Right. Such a good question. I don't go to the auctions anymore. Number one, to your point, it's competitive. I don't want to fly out to a place, do all the due diligence, price a list, get out there and realize, oh my gosh, it's getting bid up to 80 cents on the dollar. So that's why I want to get those properties before they go to auction. And so I'll get a list and I'll scrub that list and I'll take out all the commercial property, all the houses, right? Maybe I'll sort it by VL for vacant land, right? Then I'll do another scrub by assessor's parcel number because I'm actually going to send out offers on the property. I can always make more money. I can't get more time. I don't want to be in the appraisal business. So then I'll price it based on comps, divide by 4, 300% margin, as Warren Buffett would say. And then I know, based on my metrics, I want to have a 3 to 5% response rate on my offers. If it's under 3%, I came in too low. If it's over 5%, I got to retrade. I probably came in too high. And so knowing these numbers, I know for every 100 offers I send, I'm going to get 3 to 5 deals back, and I can probably close 1% of those. So
Mark,
then I'm just reverse engineering it.
The landscape for people coming online, sending out massive mailers to landowners, you can do that from anywhere. You don't have to go to the auctions anymore, like you said. So it's saturated now. How do you stand out from all of the other land investors sitting on their computers across the country mailing?
Well, I think the first thing I have to challenge you on is it's saturated now. Because you're talking about billions of acres of land available. Not millions, billions. Now, what do we have left? We've got hedge funds with billions of dollars. We have private equity groups with billions of dollars. This niche where I'm buying raw land, they got too much money. They need to put millions of dollars into productive farmland to deploy that capital. So now we're talking about
private equity is not.
Industry.
That's
Right.
not your game here. That's not your competition. I'm talking about other investors like you or me, or Ash and I have a friend who does land investing. And has AI not completely changed the landscape to where it's just so easy to find land and people who are behind in their taxes, motivated sellers? Is it not easier? It's not saturated now?
It's not saturated. It's so funny. I think it looks like it maybe, but from our data and the deals we're doing and what my clients are doing, it's not saturated. I think that it could be in maybe certain counties, right? Maybe the prices have gone up, but so has the other side of it. So you have equilibrium, right? So you have to pay more, but then you sell it for more because the prices have gone up. I don't see the data where we're not getting deals because it's saturated.
And is that the rural markets? Is that just where you play and that's not oversaturated right now?
Yeah. So I'm in the rural markets. That's not where I play. Now, maybe other niches are harder. So for example, if I'm going, let's say 30 minutes to an hour outside town and I'm doing a different model where I'm flipping for cash. So a typical model is I'm going to pay 30, I'm going to flip it for 60. That market might be more saturated because a lot of the the house flippers came into that market saying, oh, this seems like there's less competition, and flooded into it as housing became a tougher niche. So I'm not saying it in my niche. Maybe that niche is more saturated, but you would probably know better than me.
And you're doing something a little bit unique too. You're not just buying and flipping. How are you bringing in your recurring revenue, as you say? How does that work?
Okay, let's use Ash as a case study.
Yeah, because he's going to sell me some overpriced land. Remember that he bought for $2,500?
Oh yeah, that's right. You sell it to him for $10,000 on payments. Ash, do you remember when I started in mobile homes? This is exactly what we were doing, just with mobile homes instead of land. But I'll tell you what, Mark, I did like 3 of those. And I was like, this sucks. They're so small. The deals are too small. I need to do something bigger. Are you not working so hard for your $7,500 profit?
Yeah. Yeah. Okay. Let's walk through it.
Let's go.
Okay. So Ash lives, where do you live, Ash?
In Cincinnati, Ohio.
So he's in Ohio. Okay. And let's assume that he owns 5 acres of raw land in, Amanda, where do you live?
North Carolina.
Okay. So let's say that, he owns 5 acres of raw land in North Carolina, but he doesn't go out there. He's been paying property taxes, and he hasn't paid his property taxes, let's say, for this last year. And I see that. So he's advertising 2 important things, right? Number one, he's not emotionally attached to the raw land in North Carolina. And number 2, he's distressed financially in some weird way because we don't pay for things like our property taxes. We don't value them the same way. As a result, I'm going to send him this offer. And again, let's say the comps are 10 grand for your property, right? In North Carolina. So I send him an offer for $2,500. Well, Ash accepts it. Why? Because for him, $2,500 is better than nothing because the county treasurer keeps sending him notices. Ash, you owe this much in taxes. You don't pay it. You're going to lose that property to tax lien or tax deed investor. So he accepts it. Now I go through my due diligence or in-depth research. I confirm that Ash still owns the property. The back taxes are only $200. There's no liens or encumbrances. There's no breaks in the chain of title. And I might outsource that to my team in Jamaica. They're connected to an American title company. It might cost me like $20 to do. So everything checks out. I send him a check for, say, $2,300. I send the treasurer a check for $200. I own it free and clear. Now I'm going to flip it and have a built-in best buyer. Amanda, Ash, do you know who it is? Built-in best buyer?
In rural
Ash,
town, yeah.
no, I bought it from you. You're the seller.
I don't know if you're going to sell it back. Man, I don't know what kind of trick
Ash's
you do.
uncle who lives next door.
Ash's uncle lives next door. Exactly. That's the built-in best buyer, the neighbors. So I'm going to send out neighbor letters saying, hey, here's your opportunity. Protect your privacy. Protect your views. Know your neighbor. So oftentimes the neighbors will buy. Now, if they pass, I'll go to my buyers list. If the buyers list passes, I'll go to a little website you may have heard of. It's called Meta or Facebook. Buy-sell groups in the marketplace. Right? I might even go to Craigslist. But then I'll go to the lands. Land.com, landmodo.com, landandfarm.com, landsofamerica.com, landflip.com, landcentury.com, landhub.com, all these platforms where they're generating traffic for land buyers. And then I'll just make it irresistible. I'll make it a car payment. I'll say, own this 5 acres in North Carolina, this pristine property, no restrictions. $2,500 down, $299 a month, 9% interest. So I get a one-time payment, the money out. I could go 6 to 10 months out. Then I got $299 a month coming in for the next 60 months. No headaches. And so, Amanda, to your point, it's not sexy. It doesn't change your life.
Mark.
At $299. But like once you get it to $5,000 a month passive, and $10,000 a month passive, and $20,000 a month passive, and $30,000 a month passive, and $50,000 a month passive, you've solved your money problems and your time problems. And so that's the game we want to play is what is the antidote to financial anxiety? Cash is great, but I want cash flow.
This sounds great. It sounds like, okay, I'm in. It's super easy. We said passive like 18 times, so it must be super passive.
Let's not say easy.
And we said no headaches.
Okay, let's not say so. Okay, number one, it's not easy because nothing worth doing is easy, but it is simple. And let me break down why it's simpler. Because you got a piece of land, a buyer and a seller, and you don't have to go into hard money. Now let's get into where it's complicated. It's a business. So now you've got to build a business. And so we're going to use software. So we're going to use a system like LG Pass, where I can upload my list and it'll automate sending out those offers. Then once I get those offers back, right, I'm going to outsource my due diligence to my due diligence team. So there's lots of people that do that. Now I've got to start creating ads. Well, that sounds like work. How much money am I making while making an ad? No money there, right? So the marketing piece of it, we've got to find marketing virtual assistants and train them. So just like a McDonald's franchise, you got to do all these things first before you can delegate it and outsource it and get it off your plate. So yeah, there's work. It ain't easy. It is simple. And so it's really a good thing to bring up is that anything in real estate, it ain't easy. So, but what we can do is create a system and a team. We can use software. We can leverage ourselves. So eventually we're the CEO of our land business, and we're not doing the due diligence. We're not doing the marketing. We're not doing the intake. We're not doing the selling, right? We are the ones working on creating these systems and these teams and motivating them. And then we're just breaking things. As the market changes, we have to shift, and we're just focusing on our strategy. Does that answer your question?
It does. So you have a lot of systems. I assume somebody stops paying, you have to have a system to track them down.
So we use a system called geekpay.io. It's a set it and forget it payment system. So now we're collecting via ACH those checks. If they default, we use a land contract. They have 30 days to cure. They don't pay. What has happened? They've lowered our cost basis. We resell that property. And so that system automates that piece of it.
All right, Mark, this is literally like Lonnie deals with mobile homes. I have done this, but it's hard to do that many small deals. Why not just go after bigger pieces of land so you don't have to create entire systems of always buying and selling and keeping up with these notes?
Well, because the bigger the deal, right? Let's say I'm going to buy a property for $1 million and I'm going to flip it for $4 million. No problem, right? To do that. But now I've got a way smaller buyer pool. And let's say that I make $3 million. Okay. So I have a buddy who actually does this. He might do one deal a year and does this. But he likes my model better because he's anxious, because now the next year he has to go out and do that. So, I mean, if I have a river of nickels coming in, I lose one nickel, no problem. Doesn't really affect me. So I think that if you have the system and you have the team and you have the software, that a volume business makes a lot of sense as long as your passive income exceeds your fixed expenses. So
what is that breaking point, Mark? Yeah. So you have to pay for all these systems. That makes sense. I don't want to be calling people if they're delinquent on their loans, right? What is your break-even point? How many deals does it, if you're going to do 5, 10, how many per year to really make sense?
Well, let's say the average note's $200 a month, right? And let's just say on average, our software and our team is going to cost us about $1,000 to $1,500 a month, depending on quality or, whatever you're doing. So if we do the math that way, and if we're going to use like a profit first system, so I would basically at some point, I'm going to have to use other people's money to scale. But when I first start, I could start, let's just say for easy math, for every $100,000 of land I buy, it'll throw off between $8,000 to $10,000 a month of passive income, of which I would have to reinvest about 30% of that back into land.
Ash, what do you think? Are you in on this?
Well, I want to ask about your parameters when you buy. What's your buy box? What's exceptions that you'll make? Are you pretty strict on where you buy, what it's zoned?
No, not at all.
Okay.
So, no, my buy box is if I can buy it 25, 30 cents on the dollar, then I like that deal.
Okay, so our friend Tim did this up in the Pacific Northwest, and he didn't care if it's on the side of a mountain with no roads going to it. He would find a price. How do you comp something like that?
Yeah, so to comp something like that is difficult if it's the side of the mountain. So if there's no access, if you cannot find a comp, will you still try to move forward? 100%. Because what I can do, this is the great thing about this niche and the terrible thing about the niche is that you have this inefficient market where I just can't go on the MLS or Zillow and comp it out. So that's why I need some data. Now, if I can't get any comp, the only data I have then is the assessor value, which I'll divide by 2.
Okay. What's the longest you've ever held a piece of land? Because you couldn't offload it.
So I've never been stuck with a piece of land. They all sell. I always joke there's a pig for every barn. That being said, the longest we've had a piece of property, well, we have right now, there's just some properties we just don't market. Like I have some riverfront property in Tennessee that I've had for 4 years now, and it's worth a couple $1 million, but it just keeps going up in value. So we're not selling it yet. We're not marketing it. We're doing other things. So, development deals take a little bit longer if you're going to go in and subdivide, put in roads and infrastructure. But for the typical deal that we're talking about, if that property hasn't sold in 90 days, something's really wrong. Yeah. I mean, after 30 days, something has to change in that ad. Either I've got to change a headline, a price. Is the price too low? Is the price too high? There's some variable I have to change. But I would say on average, we should be selling these properties 90 days or less.
Mark, you make it sound like it's all unicorns and rainbows. Where have you gotten burned? Whether it's environmental, zoning, a myriad of different things. What can go wrong in this model?
Well, yeah, great question. So I think the biggest mistake people make is, number one, the due diligence piece of it, right? So to your point, like if I'm in Ohio and I'm buying raw land, well, I could be in an area where they're dumping environmental toxins on that land. And now I'm responsible for millions of dollars of cleanup. I could be in a Superfund site. So I have to go to a website called epa.gov to make sure I'm not in a Superfund site. Sometimes I buy a piece of property in Texas and there's just no access to it because the locals have gated it off. So in due diligence, you have to do that. Sometimes I did a deal. I negotiated for years with a property owners association. And sometimes you just don't evaluate the market because I love the deal. There's $1 million homes. There's 3 lakes. There's 2 PGA rated golf courses. It was gated, but it was overdeveloped. So I went in there and I tried to negotiate a deal with the property owners association and the county and do a workout. I said, look, you've got all this dead money. I'm going to take it all. I'll resurrect it. I'll sell all this land for you. I'll get new owners in there. And just while I own it, no fees for me, no taxes. Well, you think this is an irresistible deal, but they started fighting me. Like the golfers were like, oh no, who are all these people? We're not going to get our golf times. And the boaters were like, hey, no, that's no good. The lake's going to get filled up. And so the locals were up in arms about it. And so it took 3 years of negotiating before I got the deal done. And then it was 2008. So I bought 1,000 lots at $50 a lot, started flipping them. I made $100,000 on that deal. But when I factored in my time, I really broke even. So,
okay. So the cowboys that closed your land in Texas, how'd you get around that? 2, how would you have known that if you don't visit every property?
So I have to have a local go out there and visit the property before I buy it. That's part of due diligence. So I might have a local Craigslist gig and have somebody go out there for $50, shoot video, take pictures, stomp on that property, right? What are the neighbors doing? How far from the nearest services? What's the road like? Can you even get there? And if like, oh, I couldn't get there because the cowboy gated it off and they're going to shoot me because they think I'm trespassing. Well, then I have to go through the local county attorney. I have to get the sheriff involved. I have to show I own this property or I'm potentially going to own this property. They're cutting off this access. And is it, deals are like the bus, right? There's another deal down the pike. I would just pass on that deal and take another deal.
What's next? It's been 25 years of doing the same thing. What are you going to do when you grow up?
Well, I love helping people. So I love helping everybody along the socioeconomic chain. So if you've got no money and a bunch of time, listen to this podcast and start learning for free, right? And start taking action. And we have tons of free information. If you got a W-2 you don't love and you want to start building a side hustle and passive income, we can help you. If you're an accredited investor and you've got tons of money but no time, we have a program done for you. So for me, I want to just keep doing what I'm doing, helping people. There's been nothing more professionally fulfilling than somebody coming to me and saying, Mark, you changed my life because of this model.
Mark, Amanda and I could both use raw land for different development purposes. How do people like us piggyback on what you're doing? Because you said one of the things you filter out is commercial zoning land, right? Like, how can we piggyback on what you're doing and maybe you don't filter those out and you throw them our way?
Yeah. So do you want commercial land?
I want commercial. Amanda is looking for some development land for residential, amongst other things.
Yeah. I mean, just email me and I'll send it to the team and we'll have a dispo avenue right there. Awesome.
Mark, what do you do with all your money? How do you, a lot of real estate investors try to buy stuff, do cost segs, take bonus depreciation so we don't have to pay taxes. Do you buy stuff? How do you get rid of your tax liability?
I do buy stuff. I do like, buying for, the thing is, I always go back and forth on this, right? So I don't want the tax tail to wag the investment dog for sure. But I have a team, I have a family office. They'll bring me deals. And if it makes sense and the investment's a good investment and has depreciation, then yeah, I will do that to offset taxes. But yeah, it's funny because like my multifamily buddies, they're jealous of me because I have no headaches, and I'm jealous of them because they don't pay taxes.
What's the hardest part about getting started in this business?
The hardest part of getting started, I think, is what's hard about everything. And getting started is embracing the suck. So you have to suck in the beginning. You have to live with getting your reps. You have to deal with just failure, right? Like I go out, I get a list. I listen to this podcast. Mark said, I should go here, do this. I divide by 4. I send out a bunch of offers and it doesn't work, right? And then I go on different podcasts. I'm like, well, screw land, ATM investing. Now I got to start again, right? And then I go say, like, oh my gosh, ATM investing is kind of complicated. And now I got to take my life in my own hands, collect the money. I'm like, screw that. Multifamily. Like, wait a second. How do I raise money? How do I partner? Like, that seems really hard. And I have no experience. Screw that. So you've got to pick something and stick with it long enough till you get good. And I think that's with everything in life, whether it's real estate, whether it's a skill, whether it's a business you want to start, like just get your reps in and embrace the suck and get good at it and just put your head down. And then you wake up, you're like, oh my gosh, this moved the needle in my life. But so many people
Mark, I admire your model, similar to our buddy Tim, because you actually put your money where your mouth is and you buy the property. What are your thoughts on people that are wholesaling? They're tying it up for 6 months, trying to find another buyer and flip it.
Okay. I'm okay with it.
Okay. What do you say to somebody that says, you know what, Mark's crazy. He doesn't know what he's doing. He shouldn't be buying the property. He should just be wholesaling it to minimize the risk.
Well, I mean, what problem does it solve? why am I doing it? What problem am I solving wholesaling?
The capital outlay for the purchase.
Okay, so I don't have the capital.
Sure.
So am I doing like an option deal, or I'm tying this up? Okay.
Or, I think a lot of them might not be transparent. They say, hey, look, I'd love to buy it, but I just need 6 months. I just have to do my due diligence. And in those 6 months, they're not doing shit, but looking for another buyer to flip the paper to.
Yeah. Okay. I mean, I don't do it, so I don't want to judge it. But I think there's other ways to solve the capital problem, right? Now, but yeah, I mean, why not just, Amanda's got a ton of money. Like, just go to Amanda and say, hey, Amanda, here's this deal. And let's just split it 50-50. I'll do the work. Amanda, you put in the money, and now I've solved my capital problem.
Mark, can you describe how it works if an investor comes in as a third party to fund the $2,500 purchase? How do they get paid?
Well, I think there's lots of different ways to do it. The way that I would personally recommend anyone do it, because our margins are so big, and the real, this is not like multifamily, where multifamily, the money drives the deal, right? Yeah, it's complicated. You got to spreadsheet out that deal for sure. And you got to know your NOI, you got to know your numbers. But if you can't get the money, you got no deal, right? That's a different model. $2,500? Really? $5,000? This isn't real money here.
So what are you bringing third-party investors in for? Give an example of one of those deals.
Because at some point while I'm doing my terms deals, right, I am going to run out of money. So I'd rather do a debt deal with somebody and say, oh, you got how much money you got in the bank? Right? Amanda's like, oh, I got $100,000. I'm like, okay, well, look, let's do an interest-only deal for year one that gives me runway to buy and sell the land, and then I'll pay you back in year two on a balloon, right? And if you want to roll it over, great. The man is like, great. That's better than the bank. He's got a track record. No problem. Now, if I don't have a track record, either A, I got to get a track record, or B, now I got to do an equity deal. And I got to give up more of that profit, which is okay to do. But eventually I want to move up the ladder and just do debt deals.
In that case, it would be fairly critical to have the down payment when you're selling on terms be equal to approximately the purchase price, so you have enough capital to repay your debt investor. Is that right?
Yeah, I mean, the down payment's important. Also, the note setup fee is important, right? So we're going to juice that money down. So
wait, hold on, I haven't heard of a note setup fee, Mark. We're all losing money here. What? Tell me, what's a note setup fee?
So if I'm financing you, right? Anything, I'm the bank, so there's labor involved in my software. So I might charge $4.99 one-time note setup fee. So that's something I have to do. And then I have to charge a $9 a month note collection fee as well. So that's going to offset some of my expenses. And then if Ash comes to me and says, hey, will you modify my loan? Sure. It's only $99.
What rate do you pay for debt deals?
Well, the lowest I can. Right. So I'll get as much money as I can at 5%. I'll get as much money as I can at 7%. I'll get as much money as I can at 8%. I'll get as much money as I can at 10%. I'll get as much money as I can at 12%. Right. At some point, when we get over 12%, I'm like, well, I don't know if that money's worth it.
Mark, what's the term of those loans? Is there any interest being paid during the hold, or is it all held towards the end when the principal's repaid?
It depends on your cash flow and how you structure it and where you are in your business. So if you can pay every month, great. If you can pay quarterly, great. If you want to do it annually, great. I think most investors would like to get paid back quarterly. and then you can do a balloon. So we have some clients, they do 3-year debt deals, all interest only. And then year 3, they do a balloon. So it depends. I mean, when it comes to raising money, a lot of it's relationship based and kind of seeing what problem am I solving for my investor.
Mark, help me understand how it actually works. So, okay, let's say $2,500 is too small, but you have somebody who's going to come in for 20 grand, right? And you are buying a piece of land for 20 grand and then you're selling it on terms. Can you talk about how would you structure that? When does your private lender get paid and with what money?
So typically what I'm going to do is I'm not going to do it on a deal basis. I'm going to do it on my business, right? So they might get a UCC1 for their collateral. And then I'm going to look at my note portfolio. So my note portfolio might be worth, let's say, 100 grand. Well, I know I can liquidate my note portfolio to someone like me to $50,000. So I'm going to go to Ash and say, look, here's my note portfolio. I'm going to be really conservative. So I know that I have the capital to pay you back. So if I got in trouble and I had to sell, I had to liquidate, I'm going to pay you back first. So the most I would ever borrow then is $50,000. So that's where I would kind of start, is from there.
That makes sense. So the collateral is your broader portfolio, not an individual deal.
Correct.
Does that then mean you would have to basically sell something to be able to pay off the principal of these investors who come in, since all of your deals are on terms that pay out over time?
I think I understand the question. So
how are you returning principal? If you're doing all these extended note payments, are you saving some of that each month for the principal payment in any given loan? Or how do you actually pay back the principal?
So we're paying back the principal per the portfolio of loans.
So every month you're taking some aside and saying, hey, this is for principal pay down.
Correct. Now, what's great about it is that we've got these big margins and I'm only paying quarterly, right? So it helps my cash flow so I can buy more deals.
Talk to me about how the collateral works and any risk of that. I'm used to hearing, first position, second position, or maybe we've done lending trusts before, but it still has a single piece of collateral. How does it work when your entire note portfolio is the collateral?
So it's the business. So you have to do a UCC1 filing. So we don't want to put liens on each. We don't want to cloud title on each individual property. So that's how we would collateralize it.
And then if you have 5 investors, are they all jointly in the same first position?
Well, I wouldn't do it that way, right? So I wouldn't have positions of investors where they're all jointly in first position. So I would basically have one investor because again, we don't need millions of dollars. So, if I can't find somebody that has $25,000, $50,000, then I have a new problem to solve.
So you only ever take on one private lender at any given time.
Correct. On a debt deal. Now, on an equity deal, that's different. Then in
that case, they would be
they're getting a piece
tied to that specific property.
Correct.
Interesting.
Correct. Yeah.
All right. Thanks for making us all a little bit smarter on that breakdown. Ash, what do you got? What do you think?
I'm baffled on how this has worked for 25 years. It's very simple, great model, and really scalable because there's how many pieces of land are available for you to buy, right? It's endless.
It's endless. Absolutely.
Very simple. I don't know why we're not all doing it.
Well, I think the reason we're not all doing it is, number one, it's really boring. If I go to the best ever conference, right, to Amanda's point, it's sexy. Multifamily is sexy.
Maybe not in 2025.
Not really,
Maybe not in
yeah.
2025, but it depends on the year. But like, it's pretty sexy to say how many doors you have and how sophisticated you are.
Just makes it sound stupid when you say that, but go ahead.
To me, you know, and then, but you can get your arms, like everyone can understand. We have a housing crisis in this country. We all need a place to live. Nobody wakes up and thinks to themselves, boy, I need a piece of raw land today. Right. But again, 99% of what we have in our lives, we don't really need, but we all need a place to live. And so I think that's the difference is this is more of a business model versus a investment model. This is more, it's more imaginative. You have to imagine what someone can do on the property versus like, this is what someone can actually do living in this area in North Carolina. Here's the demographics. Here's the growth, right? Like it's much more concrete when you're talking about landlording, housing, and again, way sexier, right?
Yeah. Mark, what are you seeing for trends? Are you seeing people wanting to buy large tracts of land? What's the hottest thing right now? Are they just trying to buy a single family plot to build a house?
It's a really good question. I'm seeing all of it. I'm seeing people that want a legacy investment. They just want, I'll call it like man jewelry. They just think it feels cool to own a piece of raw land. I'll see people that want to put like, a Tesla home or a tiny home or a mobile home on this piece of property and actually move out there and figure out how to like work and live in this rural area. And so I kind of see it all actually, but I wouldn't say I'm seeing like these big trends. I think that the trend that I'm seeing macroeconomically is that we don't want dollars. Asset prices are just going to continue to rise as they just keep pumping more and more paper into this economy.
What made you chuckle, Amanda, when he was talking about dudes wanting land?
That just sounds like some dude shit. I just want some land.
Do you know how many of my friends, I think Joe Fairless was even one of them, that's like, hey, man, we should go buy some land. Like, for whatever reason.
My husband wants land too. Cool.
But you know what? Then you ask them, or I ask them, I'm like, hey, yeah, what are you going to do with it? Well, listen, we'll ride four-wheelers, we'll shoot guns, this and that. Like, yeah, cool. Who's going to take care of it? Who's going to mow the lawn?
Right?
Who's going to keep the hunters out? Who's going to all this
That's
shit?
what I always say.
Yeah,
good. All right, Ash, you're the smart dude who doesn't want some random raw land.
Yeah.
I get it. It's just a dude fantasy. It's like an outdoor man cave.
Just get a friend who lives on a farm.
People watch Yellowstone. They're like, oh, that's cool. I want some land.
Oh, let's get horses.
But I can afford it.
Who's going to feed them 5 a.m.? Yeah, absolutely. Good, Mark. Thank you for joining us today. This was really enlightening. I appreciate it. If best ever listeners want to reach out to you, what's the best way?
Well, I think the best way is to go to thelandgeek.com. And I have a special link for your listeners if they want my book, Dirt Rich, for free, just pay shipping. I have a link for them as well.
Cool. So you can add that in the show notes. And thank you for joining in, Mark. Best ever listeners, thank you for joining in today. If you enjoyed this episode, make sure you leave us a 5-star review and share it with somebody who could use some land investing advice. Don't forget to follow, subscribe, and of course, have a best ever day.